Amazon's management team elaborated on several key categories that many stock market investors were highly anticipating. And these have implications not just for Amazon, but also for other AI companies like NVIDIA, AMD, and the whole ecosystem surrounding the data centers or AI growth category. So Amazon did talk about that. I was looking forward to their numbers according to what management was seeing because we've seen so much macroeconomic volatility. We all wanted to know if there has been any major change in plans for Amazon looking ahead this year and beyond.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Amazon did say that they plan on bringing an increasing amount of capacity in the back half of this year as it relates to their data center capacity for AI. They said that they could have generated even more revenue in the quarter in the AWS segment if they had more capacity. And so they're spending aggressively. Capital expenditures were $24.3 billion in Q1. They expect that to ramp up for the rest of the year to surpass $100 billion for 2025. So at the pace, it's going to accelerate slightly from the first quarter pace of capital expenditure. And this is primarily going to be for AWS, for AI. As they say, we're going to invest to support demand for our AI services, increasingly in custom silicon like Trainium, as well as tech infrastructure to support our North America and international segments. Trainium, of course, is the in-house AI accelerator chip that Amazon has developed, and it's a lower priced option for enterprises that may not want NVIDIA's use of NVIDIA's GPUs or use of NVIDIA systems and may want the cheaper option, or also because NVIDIA systems are mostly sold out and people can't get their hands on it, businesses can't get their hands, they can't get access to it. This is another option in case they don't have availability for NVIDIA. So this is something that Amazon is accelerating investments in because the response has been so positive from the market. So second quarter net sales are expected to be $159 to $164 billion, which would represent growth of around 7 to 9%. And that's much better than I was expecting Amazon to forecast. Remember, a large percentage of the items that are sold on Amazon's platform come from outside the United States, and tariffs are going to increase the cost of those goods. That meant that I felt Amazon sales would not be so robust in the second quarter because their third-party sellers would raise prices and consumers would see higher prices and they wouldn't spend as much. And that declining activity on the platform would generate fewer sales and fewer third-party fees for Amazon. And I was grateful to see that it doesn't look like that's going to be the case according to Amazon's management. They already have a few weeks of data in their second quarter, and they're not seeing that significant decline. And that was a relief for many investors who were looking to this guidance to kind of ascertain how the impact of these tariffs are changing consumer behavior. They also expect operating income to remain very high in the next quarter, coming in at around 15 billion at the midpoint. So it's not like Amazon is just absorbing the higher cost and just to maintain higher sales, because sometimes businesses will do that when they face this kind of situation. They will just say, you know what, we want to keep our sales growing. And so even though the tariffs are going to increase our cost of goods sold, we'll just absorb it and we won't raise prices that customers see. And we'll just sell them at the prices we're normally selling them, and we'll just absorb the cost and so thereby decreasing our profitability. That's also not what Amazon is doing. They're not doing anything of that nature. They're still expecting the business to generate robust revenue and profit without making any major strategic decisions to absorb the higher cost. Amazon also said that the AI business is a multi-billion-dollar annual run rate business, and that's growing triple digits year over year. And they're actually adding capacity as fast as they put it in, it's being consumed. And I'd love to hear that from a business that tells its investors that, look, as soon as we can create this product availability or this service availability, as soon as we create it, it gets consumed. As soon as we create it, it gets consumed. And in fact, the demand exceeds supply. I love hearing those things because that means there's strong organic demand from customers. That means customers see such a great value in this product that they're consuming it hand over fist and capacity is increasing. That means there's a large opportunity ahead, not just to generate revenues at the current rate, but these revenues are growing triple digits year over year. So they could be helping more customers and driving more revenue if we had more capacity. And that's another way of saying that demand exceeds supply. Like there's more customers there, but our supply was this much. So this gap, we weren't able to convert these into sales because we just didn't have availability. And we're adding availability almost as quickly as we can add availability. It's not like we're being cautious or patient or anything of that nature. I don't think any of these large hyperscalers like Amazon, Microsoft, or Alphabet, I don't think any of them are being cautious with these AI investments. They've all indicated huge increases in spending in this category, 60% increases, 40% increases, which represents $30 billion increases, $50 billion increases. Amazon will spend over $100 billion on capital expenditures, and the large percentage of that will be on AI. Alphabet said they're going to spend $80 billion. Microsoft, $80 billion. So there isn't much caution in this category, and still the market is absorbing this as soon as these hyperscalers are putting them out. So that's another clear sign of the robust demand for AI. And I was glad to see it continue. I was glad to see it continue because I was not sure if the developments, the macroeconomic policy, the tariffs, the geopolitical tension, I wasn't sure if that would have an impact on demand and supply in this category, but I was relieved that that's not the case. So Amazon hopes that there will be some of the supply chains will ease up. There are some constraints right now that are limiting Amazon's ability to add these data centers, add this capacity. But again, they're saying there's so much demand right now that the supply chain issues and the capacity issues will continue to get better as the year proceeds because they will continue adding more and more supply. And eventually, they'll add so much supply that will likely exceed the demand. At some point, they'll have more supply than demand because that's the usual case for business. Is rarely do you see a business that's always at 100% capacity utilization. And so they will likely add more supply than demand, but that doesn't look like it's happening anytime soon. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.